Do you want to watch and learn how I underwrite an industrial deal? Watch this video to watch me walk through a back of the envelope calculation for something that's on market, but it's a great example of a single tenant industrial property. Let's go. All right, so we get these flyers, they're from Marcus and Millichap, one of the bigger groups, certainly in industrial in Texas here. And it's for this property, 2637 National Circle in Garland, Texas, which is a pretty good blue collar working class neighborhood. It's a direct suburb of Dallas, so there's a lot of workforce. There's a lot of workforce housing. And it's, I would say this is a price point at 1.2 million asking that is kind of attractive for a lot of people. So Adam here, he's a big guy. If you know him, he does a lot of deals, sells a lot of industrial in Texas. He's done pretty well. But it comes from him. So, this is what I do whenever I get something, whether it's off market or if I'm putting together a package or I just want to look at something. This is the process and the procedure that we go through. We got some photos. It looks like a pretty old, low clear height, single tenant. What I do like about this is that it does have the 4-dock high. There's not a lot of trees or roots that could cause plumbing or foundation issues. So we like that on an industrial site. It's mostly paved and, it's concrete that looks in okay shape. Could use some restriping, maybe a power wash, but not bad by any means. So here's some of the details. For somebody like me, I'm already going to be kind of turned off, but you may want to look at this to understand whether you want to move forward with underwriting or not. Okay, so single tenant, check, right? What that typically means is that it's not going to have separate office spaces. It doesn't have a demising wall in the main area. It's really built or designed for single tenant. So if you are looking to do multi-tenant, which is one way to drive value with these properties, you may have to do a lot of work or spend a lot of money to make it suitable for multi-tenant. However, that is always a great investment thesis, is to buy single tenant buildings and repurpose them for multi-tenant, because with smaller spaces you get a higher price per foot and a higher turnover and a little bit more work. But if you're willing to put the work in this asset class, you can generate a decent return or hit your yields that you're looking for. Okay, so let's go back to this checklist. 2637 National Circle. I usually will pop it into Google, so let's look at it on the maps. That's honestly, if I'm not familiar with the location, that's the first thing I do. Popular locations, rain, fresh water, great 4.5 stars review with 20 reviews. That's good. I want strong tenants that care about their SEO and have good Google review scores. All right, so if we take a look here too, just looking at these tenants' names, there's a ton of industrial, a ton of manufacturing here, which is good. I like it. Let's pop over to satellite to confirm my tenant and the use suspicions. And look, lots of big industrial, although this looks like retail. So these are big box retail. This is industrial, roofing supplies. We've got laundry systems, storm shelters. Look, we've got some big box warehouse over here. That's cool. Look at this, even more Elliott Electric Supply. There must be an electric supply company every 15 miles. I'm no joke. I need to get into the electric supply business because apparently they do a ton of volume and they need huge Class A warehouses. But look, we've got tons of manufacturing, Future Foam. We have growers. We've got food service. We've got some outdoor parking here. Are these surface cars or are they trucks? These look like cars. Oh, this is a car dealership. Okay, but anyway, just in terms of the general area, it is certainly an industrial area, and there's going to be a submarket. Look at all this warehouse. This is so much warehouse everywhere. Freight lines. Okay, so I like that, right? It's in a submarket. It's going to have a lot of data about that submarket rent, about the asset class, clear heights, what's standard for the area and what is not standard. So you're going to have some benchmarks to compare this particular property against all the other ones. Say hi, Violet.
Hi.
Here you go.
Thank you.
All right, so now if this is a new location, we're going to look at it on Google Maps. Let's zoom out a little bit, okay? again, it's kind of right in that heart. In terms of super ideal locations, I would love it to be closer to 635, which is a main commuter road, maybe closer to Garland Ave, which is a big road. It's a little bit in the middle here. Again, not a deal breaker, but if I'm coming in from out of state, if I'm looking at a new area of town that I'm not as familiar with, I would be looking for these areas to make a stronger use case in terms of function for my tenants and convenient accessibility. Okay, so we've done that Google search. How long did it take? 5 minutes. Single tenant, here's the listing price, 1.2. Here's where we get to the rub, 8.2 cap rate on a pro forma basis. So this to me is really, speculative. The leasing market is very soft right now. It has completely changed along with the interest rates, but a lot of tenants are not sure about their growth, about their ability to cover new space. And that's not necessarily a function of the economy, but it's a supply chain shortage and a labor shortage. They're not sure if they can deliver the goods in a new location if they want to expand or if they want to sign another lease. So that's what's taking pause. So pro forma cap rates really kind of scare me. And that's 60,000, on NOI. I think this is a good example of an older building. It's 10,000 square feet. It's quite small, just in terms of who's going to be able to take this. How much management are you going to have to do to gear up? It's a small amount too that's not going to be a huge attraction for leasing brokers, right? The commissions are appealed to like the resi-mercial guys. It's going to be hard, I think, to market this building short of signage on the street.
Very old.
It's very old. That's right. It's a small lot size, right? That's another thing that I look for as a fringe factor. If this was on 2 acres and it had a bunch of parking in the back, if it had unimproved dirt, those are things that give me extra value and give me more exits. If you watch this channel, I talk a lot about know your exit before you buy. And who's going to buy this building if you do what you want to do? I think it's a tough sell to get more cap rate compression on a 1.5 million, just on that NOI. Who really wants to buy it? Because I don't think private equity shops, I don't think there's a portfolio play. It's just kind of a small building by itself that's hard to manage and doesn't really fit into other investment thesis that represents your buyer, right? You can sell this kind of one-off to a doctor or a lawyer who's just looking for owning some single asset dirt that's local and can kind of locally manage it from his residential property management.
I did the old house.
Oh, that looks great. Is it small? Where's the swimming pool?
It's small.
But, here's again, what's attractive? Price per foot. If this is a vacant building, it probably really needs to be closer in the 50s to be below replacement cost. Year built 1969. That's not new. That's not nice. So let's just skim through these other photos. You get some nice drone shots. I like this one. If you can zoom in here, it's got the grade level door, which I guess you back up a truck and you can go this way, or maybe it's for hand trucks. I'm not really sure why it's at that hard angle. Normally we see ramps up to dock level doors, so you can.
It looks like I don't know what those 2 squares are for. They're for
These are doors.
That are
These
very,
are doors.
Very old.
No, these are doors.
They're
They're
very,
doors.
very old cars in.
Yeah.
Huh?
All right, but let's keep digging in. Let's look at this investment highlights, tight barrier to entry. I get that. Value add, raise and restructure. This is really what's making some of these deals more attractive is seller financing. 5% is sometimes the only way to make the deals cash flow. 8-year-old TPO roof. So the TPO is good. That's kind of just a membrane structure that they spray over and is waterproof. 8 years old, I don't know. I think it's starting to get old. Certainly wouldn't call it a new roof. 4 dock high, but it's got that weird grade pouring. So I don't know if that's still accurate. 16.5 foot clear height. So you'd want to measure and really make sure, because I always get pause for older buildings. is that 16.5 the lowest point of the ceiling, or is that in the main span and there's actually lower clearance elsewhere? So vacancy trending below, well, what's the actual vacancy? I believe it's closer to 3%. Not that it really matters for a single asset like this, but it is not quite a situation like, the Inland Empire where you're at 0. Inland Empire is like at 0% vacancy, which is just, that's crazy. But I don't think this is 2%. So it's a little bit of marketing language. It's in the heart of Garland's industrial pocket. Okay, well, this is the one bullet point I'll say is qualitatively, objectively true. No problems with that. Quick access, sure. It's not direct access. It's not frontage to 635, but, it's not a bad location close to that 635. Here we go. So rain fresh water is the tenant. And if you'll note, I commented on that in the beginning. The tenant is on month to month, and it really begs the question, why hasn't the seller signed rain fresh water to a longer lease? If the tenant is so willing to sign a longer lease, I don't think that they're marketing this as a owner occupied, right? They don't think that necessarily the highest and best use to sell is for owner occupied. They're selling it as an investment. So why hasn't the owner re-signed it? And I'll tell you the answer. Either, the owner is related to this and they don't really want to commit until they have the sale in hand, or Rain Fresh Water is a little bit hesitant and they want to be flexible, and depending on their operations, they might not be too tied to this location. So if you try to bully them with a big rent increase, what is market, they may walk. And you lose them after 30 days. It's not even like a lease is rolling over, say, in the next 12 months, which still has its own risks and clearly is, a riskier value add. They may walk in 30 days and suddenly you've got to cover negative cash flow. For all these reasons, I'll pass. I did download the marketing. So let's see, if we want to keep going. For me personally, I've already nixed this, but if this is still checking your boxes and if you're still interested to say, well, Ron, maybe I can get it at 600,000. Okay, well, let's download this.
Can we see what it is so I can draw it?
Yep, here it is.
House.
Here's the marketing package. Pretty standard information. We've got that nice aerial photo. I'm going to zoom in a little bit.
Me too.
Subject property, limited parking.
Never saw it.
Okay. So here's some more stats. You can plug this into your Excel models. 10,000 square feet, 7,000, 25. These ratios, again, they're okay.
Oh, no.
Office ratio at 25%.
And the house is very old, and because the people died there, and the cars are normal people.
Yeah. So that's okay, but I think that it's below most internal policies of around 30% ratio for office. This is also a killer here. Only 8 parking spaces. How are you going to have workers in this place? How are you going to have office people come in if you only have 8 parking spaces? The city's not going to like that if you try to have any other use come in. Again, buy your exit. Who's going to buy this with 8 parking spaces? That is going to be a huge pain point. So power is good.
You need to trim those bushes a little bit more, cut them so they don't be so involved.
So the outside is masonry, not great, could use a power wash, but it's easy to paint, maybe subject to leaks. Power 600 amp, 3-phase, so that's good. Again, I don't know what type of manufacturing you could fit in here with just 8 parking spaces. LED lighting, that's good for cost efficiency. Older TPO overlay, 2 HVACs. If you recall, they're up on the roof, which is not a big deal. It's pretty common in these types of smaller lots, but it does increase your installation costs if you do need to replace them for a new tenant.
Daddy, I can make a smaller house.
And Here's the
A
real
really smaller house, Daddy.
here's the real fact. You know, if you recall from the beginning where I talk about trending market vacancy, but their actual market vacancy that they're reporting is 5.7. 5.7. Again, it's not terrible. I think historically it's still pretty low, but it's definitely not trending to 2 fast enough that I think it would be an acceptable risk. I'm not in the business of buying vacant buildings and re-tenanting small types of buildings. It's really just not my emphasis. But if it is yours, then maybe this building is worth the risk. Offering price, cap rate, pro forma cap rate. There's a big delta. I don't like taking that much risk between the existing cap rate, but in 1969 single tenant small building in a submarket vacancy over 5%, I don't think that generates a cap rate, in-place cap rate below market debt. So, you know, you can look at all these numbers. I get it. $7 a foot. I don't know that market. It may be below. But it's still going to be a challenge, and it's going to take time to get that tenant in. They're not even on a triple net lease. They're on a modified gross, which means more opportunity for friction and more tenant disagreements as opposed to a very clear triple net. You don't really know what you're getting until you get the lease. Month to month, seller financing for $600. You know, I kind of feel like that should be the purchase price entirely. So you can go through these numbers. Again, I don't think it's worth it. I wouldn't really dig into the actual financials because it'd be real easy for me. Okay, I'll buy this for $600 at a 10 cap if I think it will even works, right? So 586700 is what I would offer for me as my underwriting. I don't think it's close enough to warrant the full model and me trotting out my Excel to really find out what the value of this is. But, you know, I just wanted to pick a low-hanging fruit, something easy for this first model underwriting. But smash that like button and smash a comment if this is something that you guys like. And if you want me to do more of them, let me know what type of product type or multi-tenant or location, because these are fun for me. I look at deals every day, and I do this little process every single day. So maybe I'll start recording it and putting it out for you guys. All right, Ron from Rohde Law, smash that like button, and we'll see you next time.